Once again, good evening, everyone. I'm Rashmi from greytHR and today's moderator of the session. I welcome you all today to our 44th Ask the Expert webinar, Parichay. And as you all know, the topic for today is the new union budget, what it means for the employees and employers. Well, before I dive into the topic, let's do a little housekeeping on how the session goes. So as usual, the session is divided into two parts, wherein in the first part, our expert speaker will give us some knowledge on the new union budget, which will then be followed by Q&A session. And also, the session is currently being recorded. So if you happen to miss out on any part of our today's session, do not worry. We will definitely share the recorded session with all of you once we are done. All right. So without any further delay, I think let's start the session. To tell you more about our expert speaker, Mr. Agnel Pereira. So I'm sure many of you are already familiar with Mr. Agnel here, but I'll just tell you a few highlights about Mr. Agnel's profile. So here, since 1990, when he passed his CA final exam with an All India rank, Mr. Agnel has built a professional track record in diverse fields, covering, among others, like management consulting, audit and risk advisory for the banking sector, especially with KPMG and Bahrain, corporate, merchant and investment banking, MSME and new business setup and advisory, training and counseling, covering multiple industries, sectors, and geographies. Since returning to India in 2012, Agnel now advises MSMEs and HNWIs for their various business and investment needs, including advising them on corporate commercial laws and tax matters. Once again, I welcome you to this session, sir. We are very happy to have you here.
Thank you. Thank you, Rashmi. And a very good evening to all the participants. And many thanks to greytHR for hosting me once again.
My pleasure. I'll
yeah.
just give a quick intro on the topic and then hand over the session to you.
Okay.
Yeah, thank you so much. So dear attendees, as you all know, while a budget is intended to look at the overall growth of the country, several aspects of the budget have a direct impact on an individual's finances as well, right? So the budget plays an important role in the lives of the salaried class community in India. So changes like the revenue or expense side of the budget have a direct influence of the budget on our daily lives, right? So the budget for 2023 and 24 was recently announced, and there are many new announcements made. So in the next 1 hour, we are going to discuss these in length with our speaker, again, Mr. Agnel. But how is it going to impact the employees?
Right.
That we are more curious to know.
Yeah,
now.
mostly these are the changes that very few changes are benefiting a very small number of taxpayers. The number one is the tax rebate that has been increased from 5 lakh to 7 lakh for the new tax regime. This is not applicable to the old tax regime, right? New tax regime also gets 50,000 standard deduction, which was not given to them until this year. So from next year, even that 50,000 standard deduction will be applicable. So a salaried employee with a salary up to 7.5 lakh rupees will be not paying taxes going forward, right? Now, here we assume that these employees are people who may be working from their hometown or even from homes and not needing to migrate to another city, not needing to pay rent. So they may not require to claim a HRA exemption at the minimum. Ignore even the investments that are required to be done under Section 80, whether it is life insurance or medical insurance or PPF and any one of those. So let us assume those are the categories who will benefit from this, which comes to about 62,500 per month, right? And tax slabs have been slightly modified for the new tax regime from the earlier slabs of up to 2.5 lakh being nil 2.5 to 5 being 5%, and 5 to 7.5 being 10%, 7.5 to 10 lakhs being 15%, and then 20% on the next slab, and 25, and then 30% above 15 lakh. I'm talking about only new tax regime. There is no change in old tax regime as long as these slabs are concerned, right? And even the highest level of surcharge, which was 37%, applied above 5 crore of taxable income, that has been removed. But that was what was implemented or brought in by the same finance minister a couple of years ago. Now she feels that we are highly taxed, so that has been removed. So that has brought down the marginal or maximum tax rate from 40.74% to 39% for those people who are above 5 crore of taxable income. The thrust seems to be more on the consumption today than on the savings. That is why there is a increased importance given to the new tax regime. Okay. The other points are very small points, like life insurance policies, where the maturity proceeds will be taxed for any policies entered into from 1st April 2023 onwards, where the aggregate premium paid is more than 5 lakh rupees per annum. Okay, that is where the proceeds from the maturity proceeds or the end of term proceeds, those will be taxed, not in times of the death occurring, where the amount paid to the relatives of the policyholder. The other point that has been introduced is the limitation on LTCG, long-term capital gain reinvestment into a residential property, which was earlier not there. Now it is limited to 10 crores. This would affect very few number of people, and they will find ways of even getting through this probably. Okay. The other key point, sorry, when I mentioned about the insurance 5 lakh limitation, ULIPs are out of this net, and ULIPs were already in a similar kind of provision from last year itself, where any premium paid more than 2.5 lakh per annum would have on aggregate would be taxed when the maturity proceeds are available. Okay. So that is basically about the personal taxation. There is one element for MSMEs and for professionals, freelancing professionals. For MSMEs, there is a section called Section 44 AD, where turnover up to 2 crore, okay, so provided not more than 5% is received or spent on the total receipts or total expenditure, as long as not more than 5% is in cash, right? For those people, if they offer 6% of their gross turnover as gross total income, that would be sufficient without any questions asked. That is a presumptive taxation rule. I will just repeat: anyone who had a turnover up to 2 crore can offer 6% of it as their gross total income, provided not more than 5% is in cash, or rather more than 95% is in non-cash receipts and non-cash expenditure. Okay, that was the condition. That limit from 2 crores has been raised to 3 crores. This is a welcome measure. Even though it may look small, but it is quite useful. If you say 6% on 3 crores, about 18 lakhs someone can show as gross total income, on which they will still be eligible for Section 80 deductions, or even the Section 24 interest on house property, interest on housing loan of 2 lakh. Even for that, they will be eligible. That is for the businesses. Then for the professionals, some specified professionals such as lawyers, architects, engineers, CAs, CSs, doctors, and so on. The list is there under Section 44 ADA. Under that provision, so far up to 50 lakh of gross receipts in a year, those professionals could offer 50% of that as their income without getting any other deductions of expenditure of their profession, up to 50% if they had offered for taxation. that was not up to, sorry, minimum 50%, that was treated as their gross total income. Example, on a 50 lakh total receipts, 25 lakhs will become their gross total income, on which all other deductions were permissible. This 50 lakh limit has now been raised to 75 lakhs. So what I can tell you is those who have up to 75 lakhs of gross receipts from professions, like whoever, lawyers, as I mentioned, lawyers, doctors, or CAs and so on, they can offer 37 lakh 50,000 as their gross total income. These are some reasonably sound provisions to encourage the MSMEs and self-employed professionals. I'll come to the end where I'll give a little bit of more on that. There are again small changes in transfer of gold to gold receipts not to be treated as capital transfer, taxing of online games, which was already discussed in the past also, 30%, right? For cooperative societies, there are some small changes in provisions, like cash withdrawals, which was to be there has to be tax collected at source when there is a cash withdrawal. That limit has been increased from 1 crore to 3 crore for cooperatives. So that is one small change. Then startups, they have some small changes from carry forward of losses from 7 to 10 years. And TCS on foreign remittances. This is one interesting point where in the past this was not there, or was at a lower rate. For example, 5% was the tax collected at source, TCS rate, for amounts remitted abroad under the liberalized remittance scheme. People could remit in any amount which has been taxable in the country. Already taxed amount is being remitted. On that, 5% used to be charged as a TCS. Now that limit has been increased to 20%. And along with that liberalized remittance scheme, even the foreign tour packages have been added in that. So if anyone goes to anywhere abroad, so Canada, England, or wherever under with Thomas Cook or in any other tour operators, and amounts that they are paying in foreign currency will have to be they have to deduct tax at source, right? Some other procedural changes are there, like appointment of joint commissions and all that. So I will not cover that because that does not affect the employees or employers. For employers, I don't see there is much change to be discussed here, apart from the calculating the old tax regime or the new tax regime, the figures. Now, based on this, I will just give you a summary points at the end. Though deductions and exemptions are not allowed under the new tax regime, the employer's contribution to PF and to national pension scheme, subject to limits of 14% and 10% for each one of them respectively, and subject to overall limit of 7.5 lakhs, is still available. So employees and employers can try to renegotiate their employment contracts accordingly. So part of their salaries can go into these savings schemes where money can be saved by them, even in a new tax regime. It is available. Okay. The next point is I have looked into the income tax computation of both old tax regime and new tax regime, and as long as you have, let's say, a 2 lakh interest on housing loan or up to 2 lakh of deduction under section 80C and 80D, the old tax regime itself looks much or favorable compared to the new tax regime. Only where you don't have those deductions, then up to a certain level, up to around 15 lakh of income, you may feel that the new tax regime is favorable. But when the income levels increase, the old tax regime only continues to be favorable as long as you have a minimum of around 4 lakh to be deducted. I'm even ignoring the HRA deduction, which will give much more difference in favor of old tax regime. The other point I have to bring in here is this presumptive taxation, which is covering the self-employed professionals. Now, why I'm bringing this into this employee-employer discussion? Now, most of the employees, may be undertaking some specific responsibilities as employees, on whom the employers will have to bear a lot of additional expenditure also, such as the PF, the retirement benefits, and all the and also the office space and so on. If this is just my personal view, if you consider that there is a specific professional, maybe a lawyer who is in your legal department, or maybe a CA who is in your finance department, if such a person is now going to be changed from an employee to a service provider who operates on his own, whether or not he has got other similar clients, or all that, or whatever you call as moonlighting and so on. So whether they have other things or not, if he takes up your task and achieves your task as per the service contract, he could be changed from an employee to a professional, independent professional providing you service. Now, what is the difference here is that for the employee, he will save some taxes, whereas you will save some retirement kind of benefits that you are going to give to the hitherto employee who may become a service provider. And also the employee on his own can ensure that he does the required savings for his retirement purposes. There are provisions under Section 80C like PPF, there is a national pension scheme, or if not, he can go into long-term mutual funds, or invest his money by himself. In any case, what will benefit is the presumptive taxation provision of, let's say, 50% of his total gross receipts. If his salary is within 75 lakhs only, this will apply, otherwise no. Or if his total receipts from not only you, maybe from even small one or two other companies, comes totally to not more than 75 lakhs, only for him this will apply. And the TDS rate here is 10%. And if he was an employee, you had to deduct tax at the marginal maximum rates as applicable. One point here is, if his receipts are more than 20 lakhs, he will have to take up a GST registration. And even if he has to add a bit of GST, add the GST on his billings to you, those are allowable as ITC. So you can consider whatever is your calculation of the taxation, and accordingly you can think of. This is just a thought. Maybe if more and more people do this in the future, probably the finance minister may remove this presumptive taxation provision also. We are not sure. So with that, I have come to an end of my presentation, and if you permit me, I will just do I have 5 minutes to share a screen, Rashmi? Hello?
Sure, sir. Yes,
Huh?
you
Yeah.
can.
So we are around 4:40. I will share the screen, and
Probably we can then move towards audience
yeah,
questions.
this is only to quickly run through the old tax regime and new tax regime.
Sure.
Just a second. Yeah, here I am. Okay. Yeah, I'm sharing. Okay. Is the screen visible?
Yes, sir.
Okay.
So before that, I just have one question. While we were already discussing about this, what are the key tax benefits of the new budget?
No, these are exactly the new budget key tax benefits that I mentioned. The tax rebate of 7 lakh, the slightly modified slabs. There are not many benefits in this budget, Rashmi. As I mentioned to you, there is the standard deduction which was available only for old tax regime. Now it has been applied to new tax regime. I'll just quickly brief on this. So with this, maybe a slightly better understanding can be received. Now, what I have done is, here I have done some basic assumptions. If you have a basic salary and let's say an HRA, which is 50% of the basic, and then there is a total salary, and someone may be making a rent payment being in a big city, and then there are Section 80C and CCD investments like the LICs and PPFs and NPFs and so on. Medical insurance, I have taken only 50,000, not even considered parents to be, senior citizens where the eligibility increases. Then interest on one housing loan. What I have done is basically here, scenario one, I have compared for old tax regime and new tax regime. And scenario two, I have compared for a smaller salary level of 7.5 lakh rupees. And scenario three is basically where under old tax regime, but without any deductions. So when we go down, I have calculated the deductions and so on. Like for example, in the scenario one old tax regime, we are putting a eligible HRA of let me see, he pays 6 lakh rent, which is 50,000 per month in a big city. It's still possible for a salary level of this with the family. The rent minus 10% of basic will come to 5 lakh. That is eligible as a deduction, subject to a maximum of 50% in a big city or 40% of the basic in a smaller cities. As I said, this may be a big city, so up to 5 lakhs is available. Standard deduction of 50,000 is across all, which is old tax regime as well as new tax regime. So the net salary I have shown as 9,50,000 for net salary income, 9,50,000 in the old tax regime, 14,50,000 in the new tax regime for the first scenarios, and second scenario 5 lakh and 7 lakh. Okay. Now in the first scenario, old tax regime, we have other deductions like interest on housing loan maximum of 2 lakhs, ATC and ATCCD related deductions of 2 lakhs, 80D medical insurance. So after all that, under the old tax regime, the total taxable income comes down to only 5 lakh. Whereas in new tax regime, it still remains very high because none of these deductions can be claimed. Okay. So if you compare that, the tax liability, you can see 12,500, you get a rebate under section 87. So your net tax liability is only 0 in case of old tax regime under the scenario 1, whereas there is a tax liability under the new tax regime. However, in the scenario 2, old tax regime and new tax regime both will be having no tax liability, even though being the salary being lower, and even if we do not claim any of these other things under the old tax regime also, it will be still within the tax rebate zone. Okay. And in the last one, there will be a tax liability under the old tax regime, assuming that there is no investments made by the taxpayer, or no HRA coming to him. He is in his own same hometown. He probably working from home and so on. Okay. Then I'm just giving you a quick calculation. I don't want to take time. This is just to explain how I calculated the tax liability in the first part. Okay. I've ignored the education cess on this because it is common across all. Everyone gets to pay that. And part B, levels of gross salary income and tax liability under the OTR. I have just calculated for certain levels of income from 7 lakhs to 20 lakhs. Throughout, it looks like if as long as you have at least around 4 lakhs of deductions, you will be paying lesser tax under the old tax regime. So it has been observed even in the income taxes calculation tables, you can see that OTR is far better than NTR as long as you have deductions of at least around rupees 4 lakhs. Okay, that is what is shown here. In the first part here, I'm showing new tax regime is better because there are no deductions. Whereas under this, I'm saying just the deductions under section 24, which is interest on housing loan, or section 80, up to a maximum of 4 lakhs only taken for income level of 50 lakhs, 75 lakh or 1 crore. Even there, the benefits are better for old tax regime versus the new tax regime. This is basically what I wanted to wanted to share with you, and that's all I had for the day. I can take maybe 10 minutes more because if I have overshot 10 minutes of my presentation, I'm willing to stay on for another 10 minutes if you have any questions on this.
Thank you, sir. Thank you so much. I think that perfectly answers my question. So I'll now take up audience questions, sir. We already have a lot of them lining up here. So the first question is from one of the attendees who would like to know what is section 80 CCD2 and Section 80 JJAA.
Oh, okay. Now, if those are specific questions on answering a specific provision, 80CCD is relating to National Pension Scheme. That much I am aware of. But I think these questions you can easily find answers on the on the on the search engines, Google or Bing, by just typing it. If you want, in 1 minute time, I can find out what the JJA is. But I don't want to do that. It can be done for saving the kind of time. It can be done by the people themselves to find out. Okay.
Sure, sure, sir. Also, sir, if you don't mind, I think we will also be sharing your mail ID. So these attendees can also write
Absolutely.
back to you, right?
Absolutely. I'm very happy to share any doubts, any clarifications they individually have. I will provide them detailed answers and even interpretations and explanations, not just the section or a provision. If I can tell you, like, there is a 80TTA. 80TTA is the interest on savings bank deposits up to 10,000 is exempt. Okay, but things going beyond that, there are section 54 deductions on the capital gains. So what is that, how it is calculated, all of those things can be provided on a personal one-on-one basis. And I'll also share them a summary which I have prepared as a as this budget highlight on a one-on-one basis whenever they require any clarification.
Okay. I'll just take up the next question, sir. It's about the surcharge rates. So one of our attendee would like to know what are the surcharge rates applicable in the new tax regime for the financial year 2023 and 24.
Surcharge rates, right? You're talking
Yeah.
about surcharge. Yeah. Surcharge rates only for above 5 crore of taxable income from 37% of the surcharge that has been brought down to 25. Basically, the same surcharge of the previous slab, which is between 2.5 lakh, 2.5 crores to 5 crore, on which 25% was applicable. Same percentage will be applicable on the higher income levels also. So with this reduction in surcharge from 37% to 25% in the highest slab, the maximum tax rate is coming down. Maximum tax rate or maximum effective tax rate is coming down from 40.744% to 39%. That is the only change. Other surcharge rates are not changed. And I also read that these revised benefits for above 5 crore applicable only under new tax regime. So for people more than 5 crore, it is better to go under new tax regime than the old tax regime.
Sure, sir. Thanks for answering that. Next question is, sir, could you please clarify on standard deduction if salary is more than 15.5 lakhs per annum?
Okay. So actually, that also I noted in Finance Minister's speech that was offered by Finance Minister as an explanation or as an example. She was trying to say that, if you have 15.5, what will happen? Minus 50. So on 15 lakh, how much tax you have to pay? But it is not intended to be given only for people having more than 15.5. The standard deduction of 50,000 will be available for any salary level, as I mentioned, at 7.5 lakh of total salary or 62,500 per month. Even on that 7.5 lakh, 50,000 will be deducted. Taxpayer will have 7 lakh as the taxable income, which will be entitled for the tax rebate under section 87.
Sure. Also, sir, we have another interesting question. So the question is, if we register under GST, maintaining books of accounts becomes mandatory. Then ITR under presumptive income scheme is advisable. Isn't it contradictory? Please advise.
No, books of accounts, as in what? Books of account as in basically your invoices, your bank account details, your cash book details. Those basic details of books have to be maintained. That is given, and it is not very difficult for people to maintain that, right? So I don't see anything contradictory. But there is one thing we need to remember is where it exceeds 75 lakhs for a professional or exceeds 3 crore for MSME business setup. In that case, there will be a need for tax audit to be done. And also, if cash receipts are more than 5% of the turnover, they will not be eligible for this presumptive tax at 6%, in which case one has to go into the tax audit requirements.
Sure. Next question is about Section 80G, sir. So the question is, what is the maximum provision for donations under Section 80G, as in how much percentage is saved?
Okay, there are two types of donations eligible under Section 80G. One set, actually detailed names, you will have to go into the list which is available in the income tax website or anywhere else. There are 100% exempt donations, there are 50% exempt donations. Most of the government related donations like Prime Minister's National Relief Fund or any earthquake fund or any calamity fund, any of those are eligible for 100%, and many others which have received specific exemptions like the smaller trusts or NGOs which have received the specific approvals from the income tax department, they are eligible for 50%. Subject to a 10% eligibility criteria of the gross total income. There is a slightly detailed computation. If any specific persons have any specific query on that, I'll be happy to answer them in a detailed manner rather than just cover a vast subject in through this oral presentation.
Sure, sir, sure. All right, so I'll take up next question, sir. This is about the grievances. So the question is there any statutory body to address our grievances on the taxation of the salaried employees?
Can you come back again on that question?
Sure, sir. I'll repeat. Is there any statutory body to address our grievances on the taxation of the salaried employees?
Oh, absolutely. To be very honest, even though I was I was earlier a bit critical about the provisions not giving enough to the taxpayer, but I must tell you that lots of improvement has happened on that front. In the past, we used to struggle to go to the income tax department, to go to the officers, and present our issues. Today, everything the tax filing professional, he could be a chartered accountant within the office or outside, or just a normal IT filing professional, he will certainly know that there is a specific section for grievances itself where you can lodge your questions, and that is also used where income tax officers communicate with you, and they send you notices by email asking you to explain certain things, asking you to provide details and so on. Even that can be done through online measure itself. It is all available on the IT portal, and with all the big money spent on the IT companies making this IT portal, that is a big blessing, and lots of things are streamlined. And I also heard Finance Minister mentioning that she is thinking of one single ITR form going forward, and if that happens and if the complications are removed, that is fantastic. Absolutely nothing to worry. Your grievances can easily be handled by your chartered accountant, whoever is filing your ITRs.
All right. Okay. Sir, next question is about standard deduction again. What is the standard deduction for old and new tax regime?
Both are same. Both are 50,000. Up to this 31st March 2023, only the old tax regime received the standard deduction. But from 1/4/2023, that is the next financial year, both the regimes will receive the standard deduction of 50,000.
Okay, so it is flat 50,000 for both.
Yes, yes.
There's no difference. All right. Thank you so much. Next one is, what are the new changes in personal income tax?
Which is what I already explained. Basically, that under the new tax regime only, where you get a higher level of income which is under tax rebate. Earlier, or up to this financial year, we had tax rebate up to rupees 5 lakh of income. Remember, the income has to be the taxable income, or the total income in IT parlance, is to be up to 5 lakh only. If it is 5 lakh and 10 rupees also, you will end up paying a tax. You are not eligible for the Section 87A tax rebate. All right. So that has been raised to 7 lakhs under the new tax regime, which is as I mentioned, 7,50,000 salary minus 50,000 standard deduction comes to 7 lakh. Up to that level is zero tax. That is the only thing. I can't see much else in this budget for individual or salary taxpayers.
Oh, also, sir, when you mention these numbers, I'm assuming that this is the taxable income, right? Not the
Yes,
total
yes,
income.
yes. It is a taxable income. It could be like, for example, if you have a salary income of, if you have a salary income of let's say 6 lakh, and you have other incomes, maybe interest or your dividends or capital gains and so on. Even though they are taxed at slightly different rates, like capital gains are taxed differently. Short term is at 15%, long term on equity is 10%, long term on other things is 20%. Like that, there are different rates. But I'm talking about total or taxable income of 7 lakhs.
Got it. Okay, thank you for clarifying that, sir. Next question is, can we claim any deductions under the new tax regime 2023?
Any deductions? Uh, as I mentioned, see, the only deduction that we can see that is available is the standard deduction. But there are certain things, as I mentioned, like employer's contribution to PF up to 14% of the basic plus DA, or his contribution to national pension scheme up to 10% of the basic plus DA. Those are, kind of exempt. They are not to be included in the income. But apart from that, I can't see much else for the new tax. Even you won't believe that finance minister has forgotten that under the old tax regime, there was a profession tax of, say, whichever state is levying a profession tax. At some places it is 200 rupees per month, or some places it is 2,500 flat per annum. Even this was available under old tax regime. Along with standard deduction, people used to claim. Now she has introduced that under the new tax regime, but we forgotten even the small amount of profession tax. She must have forgotten. I don't think it is intentional, because the amount is so small. She could have easily, added one more line in her, wishful thinking kind of, the rosy picture kind of thing, right?
Sure, sir.
Yeah.
All right. Also, sir, I just have a couple of more questions.
No problem. No problem. Please ask. I will spare more time. And in between, the slight disturbance was for plugging the power, power for the laptop. That's why I had to
No
move
worries,
in a
sir.
bit. Yeah,
I
yeah.
think
Tell
these
me.
are all new normals which we are used
Yeah,
to
yeah, yeah.
now.
We have to get used to. I'm happy that my internet has survived till now. In the morning, whole of the morning, I didn't have internet at all. I was worried that if that would affect my presentation right now. Yeah, please go ahead. Go ahead
Yeah,
with it.
sure, sir. So the next question is, sir, can HRA and ATGG both be claimed by one employee?
And no, HRA and ATGG cannot be claimed by one employee. It is either or, because HRA is given for specifically for salaried employees. Okay, ATGG is given for non-salaried employees. Suppose somebody is in another place, another town, let's say an independent professional who moves from Bangalore to Indore and does his practice, and he has to take up rented accommodation. So he is eligible under ATGG, but since he is not getting a salary, he does not get a HRA. Okay, but the section 24 interest on housing loan is still eligible even if he claims a HRA, because the logic or argument for that is somebody may be working in a particular city where he is paying rent, whereas his house may not be convenient for him. The house on which he is paying interest, or paying the repayment of housing loan, that may not be convenient for him to use. So still he pays rent, as well as he claims the interest on housing loan maximum of 2 lakh, as I mentioned earlier in the calculation.
Sure. Also, dear participants, we are trying our best to answer your questions. Due to interest of time, we might have to skip few questions. But please don't be disappointed. We will definitely get back to you with the responses for all your questions. Also, we will be sharing the mail ID with all of you, to whom you can also write back. All right. With this, I'll proceed to the next question.
Sure.
So the question is, what is the basic exemption limit under the new tax regime for the financial year 23 and 24?
Okay. So just for academic purpose, this basic exemption limit is relevant. It is changed from 2.5 lakhs to 3 lakh rupees. Okay. So under the new tax regime, up to 3 lakh rupees is zero taxation. 3 to 6 lakhs, it is 5%. Okay. And 6 to 9 lakhs, it is 10%. So what happens is, for those who have salary of 3 to 6 lakh, on that incremental 3 lakh, 5% is levied, which is 15,000. And for those who are between 6 to 9 lakhs, incremental rate of 10% is applied, plus the earlier slab amount of 15,000. Okay. However, as I mentioned, remember there is another clause in another slab in between of a tax rebate. This could have been easily avoided. Finance minister could have given a rebate for 9 lakhs rather than 7 lakhs. That could have been easier for everyone to calculate. But now we have to calculate 3 different scenarios. One is those who have income less than 7 lakhs, those who have 7 lakhs, and those who have more than 7 lakhs. That all of that comes within the single slab of 6 to 9 lakhs, which is 10% of the taxation.
Sure, thanks, sir. The next question is, if an employee selects new tax regime, can this person who is having the business income claim the business expenses against business income? Also, please explain claiming of 80 deductions under new tax regime, section 80 deductions.
Okay, so there are 2 parts of the question. One is a business income, right? Business income is derived after taking into account all the incomes and expenses related to the business, right? See, I hope you got what I'm trying to say. All the income minus expenses is your business income. Now, section 80 is coming after you have totaled up all your incomes, whether income under the head salary, income under the head house property, income under the head business, income under the head capital gains, or other sources. All of this put together comes the gross total income. Now, from gross total income are the section 80 deductions. Okay, so section 80 deductions are available under the old tax regime. But your question, new tax regime, once you opt for that, you won't be eligible for any of the section 80 deductions, as I have already mentioned in the earlier my presentation also, whether it is business income or whether it is salary income or any income, one is not eligible under the new tax regime for any of the section 80 deductions, except, okay, that is only under salary, where the employer contributes the provident fund and all that. But otherwise, there aren't any.
All right. Next question is, can an employee claim 80 EEA and section 24 together?
Actually, yes. For section 24, it is the interest on housing loan taken for house property. Okay. Now, 80 EE and 80 EEA, in 2 separate years, these were introduced as a support for affordable housing. Okay. And in those, there are some specific clauses, conditions that are applicable in each of those cases. One of the clauses, the property value should not exceed 50 lakhs. And in another clause, the loan should not be more than 35 lakhs. So if you look at a 35 lakh loan, okay, and the interest rate so far on housing loan used to be around 7 or 8%. Let's say 8%. At 8% on a 35 lakh loan, even in the first year, even before, let's say, principal starts, it's very clear for us to calculate. It would come to about like 2,70,000 as the interest. Now, 2 lakh was already available under section 24. Now, extra interest can be claimed if your loan was below 35 lakh, or if the value of the property was the government valuation of the property was below 50 lakhs, which is used for the registration purposes. Both can be claimed subject to those calculations and those conditions to be kept in mind. And I don't remember if there is any other condition, and that has to be their first house. That has to be the persons, the one who claims the exemption under section 80 EE or EEA. It has to be their first house. They can't claim it for second house onwards.
Sure. Also, sir, I think in the last to last question, you're talking about PF, right? So I think there's one question related to that. So the question is, what are the changes in taxability of PF?
These are not changes in the taxability. These provisions are continuing as it is. These are not new things that are brought into this budget. I mentioned about employers' contribution to PF and NPS is already existing. It is available for new tax regime also. as I mentioned, the limits of 14% for PF and 10% of basic and D8 for NPS, subject to overall limit of 7.5 lakh. Up to that, it will be exempt from the from taxability, even under the new tax regime, as is under OTR. But there is nothing changed for PF in the current year.
Sure. All right, sir. Next one is, sir, I think this is one common question all of us have. That is, once employee selects the new regime, can he switch back to the old one if it is available?
Yeah, salaried employees can switch in every year, but businesses, they cannot switch every year. Once they've chosen, I think there is a minimum 5 years. After that they cannot, or maybe indefinite. I need to clarify that. But salaried people, they can claim they can switch every year between the two regimes.
All right. One more is, sir, I think this is specific to the scenario there. In order to claim HRA and Section 24, if the house is in the same city, but it's far more than 30 kilometers from office location.
Correct.
So what is the actual distance to be considered?
No, I don't think there is a kind of a rule that has been laid down about the distance. Okay. Now, even if you have a house, let's say you have not rented it out, you have a house, but you have taken loan on that. Under Section 24, you are still eligible, and that does not say that you should not be renting another house, or you should not be getting HRA. There is no such rule as such. It's the kilometers is only more of a practical kind of thing. Tomorrow, maybe IT officer can ask you, you have a house within 10 kilometers, why you can't use that? They will not go into that, because it is not in the income tax law to ask any of those questions. Those are only practical thinking people might have, but they will not affect a person's eligibility. What is necessary is there has to be a house that has been purchased, there has to be a loan on that, there has to be actual payment, because you need to keep the statement of repayment of principal and interest received from the bank or the housing finance company, and that has to be provided where it is necessary. Especially that has to be provided to the employer for employer's TDS purposes than for the ITR filing purpose, because most of the times in ITR filing, these questions will not be asked unless there is a kind of scrutiny which the IT officer calls for.
Sure. Next question is, sir, about Section 80E. The question is, what is the percentage that can be saved on 80E interest on loan of higher self-education? And what is the proof to be submitted for 80E interest on loan of higher self-education? So it is the same, but one is what is the percentage, and the other one is what proof has to be submitted.
No, actually, again, it is a statement of the repayment where interest on education loan has to be provided to the employer. There is no limitation of the interest amount that is eligible under this section. There is no limitation of any percentage or whatever, but it is for what is the condition is that for the higher education purpose, the loan must have been taken, not for the regular. I'm guessing. I have not seen the explanation, to be very honest. The regular graduation courses will not be eligible. I'm guessing that it must be for post graduation or PhD or research kind of scenarios.
Sure, sir. All right.
As long as loan is taken from a bank or a financial institutions in India, even loans for education abroad is also covered in that.
Great. All right, sir. So next question is about telephone and vehicle reimbursement. So the question is telephone and vehicle reimbursement still there for 2023 and 24?
Okay. It's a good question. Like if telephone reimbursements are done by a company, knowing that an employee will have to use his mobile phone or a phone line for business purposes also. Okay, it not as a purely as a personal expense, because company cannot reimburse a personal expense. The moment they do that, they will come into the perquisite definition. There is a perquisite definition where limits are prescribed for this sort of expenditure. But these are small amounts that are reimbursed, like telephone or the transportation. Actually, earlier all these small allowances were there, and the reason standard deduction was reintroduced of 50,000 2-3 years ago was to take away all those kind of small allowances and pay one single standard deduction. However, there are still things like traveling from home to office. Sometimes what happens in big cities like in Bangalore or in maybe Gurgaon or those places, there may be companies which transport the employees themselves at their cost. And some places it is not available. They may say that you come to office, we will pay for coming to the office. So coming to the office expenses to a reasonable extent are also permitted as allowances, not taxable in the hands of the employees.
All right. And also, sir, can you please explain how it can be claimed, the telephone and internet reimbursement?
No, claim that is between the employee and employer. How employer has put in the requirements. It is very little to do with the income tax. It is the employer's expenditure of taking care of staff or the employees, right? So so if the employer wants to, two employers are competing and one employer says I'm not giving and another employer saying I'm giving, and the employer might go to that. So it is ultimately the employer's ability to convince. You guys in HR, you will know better than me about these things. Yeah.
Sure, sir. All right. So the next question is about housing loans, sir. So the question is, can we claim interest on housing loan on let out property and self-occupied house property?
Okay. You can claim on both, but let out property, you have to offer the rent received on let out property as income under house property. Okay. So self-occupied, you can still claim up to 2 lakhs, and let out property actually, even if the rental is lower than the actual interest paid, let's say interest paid is 3 lakhs. Are you with me? Interest paid is 3 lakhs, and let's say actual rent received is only, let's say 1,50,000. In that case also, you can still claim that 3 lakh that you have paid interest on a let out property, as long as you show the 1,50,000 rent as income, and property number 2 self-occupied, on which you can still show a 2 lakh interest on housing loan deduction on that self-occupied property also.
All right. Also, sir, the same attendee also has a question. That is, if an employee selects the new regime at the employer, can he file IT returns in the old regime?
Yes, he still can. That option is still available for the employee. See, what happens between employee and employer is meeting the obligation and liability of the employer to deduct tax before an employer makes a payment. Now, that is a universal rule which is across board for anyone who pays any income to anyone, must ensure that deduction of tax is done as long as that deduction provision exists in the law. Okay, that is what employer does. For that purpose, employee has to provide certain the details. Now, as per the details, employer deducts the tax. Now, then employee later on finds that maybe because of various other income, he finds that the other tax regime is beneficial, or maybe he has not given certain deductions, etc. Let's say section 80C, some LIC premium or PPF records, etc. He has not given to the employer, and he said, okay, deduct under new tax regime, don't deduct anything under this one. And later on, he gets all these, he can use all of this, and ultimately the filing of ITR is the most important thing. Okay, that is the thing that is between the government and you as an employee. That is where you can choose a regime which is different from what you have given to the employer.
Sure, sir. Thanks for clarifying that. So next is, can we claim principal if house is under construction?
Okay, this is a technical question. I will need to get back to the gentleman or whoever has asked that question separately, because there are some rules relating to that also. There are some during the construction, if there is an interest that has been paid, or principal that has been paid, there are some 5-year kind of calculations involved. Such amount is allowed over a period of 5 years equally, and those sort of rules. I've not given full attention to that part. I can provide that explanation when it is if someone contacts me.
Sure, sure. So thank you so much. And also, sir, next question is about section 80D. what is the maximum limit that we can claim under Section 80D for medical purpose?
Medical is for self, it is 25,000, and also parents another 25,000. If the parents are senior citizens, that 25,000 limit exceeds goes to 50,000. So 25 and 50 can be claimed. And if the person claiming or the taxpayer himself is a senior citizen, he himself gets 50,000 for himself, as well as if he has got parents also, and another 50,000, as long as they are not covered under any Mediclaim or those policies.
All right. So last two questions, if you
Okay.
don't mind.
Okay.
Yeah.
We'll
We
close
are
it with
done.
that. Yeah.
Yes, yes, we are done almost.
Yeah.
So last, this question is about reimbursements. Are reimbursements part of CTC?
You should answer that. See, CTC, it's ultimately a cost to company. What is reimbursement? Reimbursement is, let's say, an expenditure incurred by an employee. The company is bearing that. Unless the company is showing, let's say, telephone expense reimbursed to an employee. If it is shown under, let's say, staff welfare expense, probably it comes under the CTC kind of norms. But if it is, if the employer puts it under telephone expenses of the employer, probably it does not look like a CTC. It's up to the employer to treat that, whether it is CTC or not. And basically CTC is only, again, a terminology used between the employer and employee, basically by the employer to convince an employee that your salary is this high, not exactly how much you are taking home. Then we are giving you this, we are giving you that. Even sometimes the tea, coffee, etc., served in the canteen also may be quantified by some employers and say that this is also part of your CTC. Cost to the company. CTC is cost to the company, right?
Right.
Hopefully they don't include the electricity charges for putting the AC on and things like that.
Sure, sir. The last question is about allowances, sir. Night shift allowance, fuel allowance, travel allowance, and fuel reimbursement, attendance allowance, are these taxable or non-taxable amounts?
Okay, there are some, both ways answers are available. There are some specific provisions in income tax where I will not be able to take you through each one of them. So like some remote areas, if somebody is working, or if they're working under those strenuous shifts, people working in mines, there are different types of the provisions relating to that on taxability or non-taxability. Most of the allowances given by any name are taxable unless they are specifically exempted under the act, which has to be looked into individually. If you just put a couple of words, taxable allowances or non-taxable allowances on any of these Google, Bing, or whoever, you may be able to get those answers in
Sure.
as a list. Okay.
All right. So just one thing I'm very curious to know, since you're already talking about the housing loan, about let out property, what if there is loss? Like, for example, my question is loss from let out house property due to interest on housing loan. Can we carry forward this to the next financial years to set off?
Yes, before even carrying forward, you can adjust it against any other income that you have. We have 5 heads of income. One is salary, one is income from house property, then we have business, we have capital gains, and then we have the other sources like interest, dividends, and so on, right? If there is a loss in house property, it can be set off against another income in the same year first, and only if that is not possible, then it can be carried forward.
All right. Yeah, thank you so much, sir. So I think now we have taken a lot of your time. So sorry for that.
Yeah.
I think we are going to end the session now. So if there are any more questions, dear participants, don't worry, we will definitely get back to you with the response.
Yeah, well,
And once again, thank you,
just
Mr. Agnel. so much, sir. You have certainly given us a lot of insights on the new budget, and I must say you're very humble and generous, sir. Thank you so much for giving us all the insights here. And also, dear participants, you can always write back to us on the greytHR community. It is a knowledge sharing platform. The link is already given here. You can just sign up here and get in touch with all of us. And also, I think now it's time to end this session. So thank you all the attendees who has joined us today and have made this session successful. If you have any more questions, please write to us on the given mail ID on the screen, that is rakigautam@greytip.com, and we will definitely get back to you. So on this note, let's see you in the next upcoming session with yet another interesting topic. Till then, have a great time. Stay safe. Thank you.